Good morning and welcome. Patriot Radio News Hour. Joe and Jason on a Friday. You know, we monikered this the year of chaos, and man, have we got it once again. Gold and silver skyrocketing. Man, silver right now up over $1.15 an ounce, almost to $31. Gold's up 37. Copper, right? We keep talking about it. It's flying again as well. And, you know, more and more people continue to come out, Jason, and continue to worry about the size of U.S. debt. And China broke a record with the amount of debt that they unloaded in the first quarter of this year. Ray Dalio now, the latest to come out and say, hey, guys, trouble is around the horizon. And everyone's like, inflation isn't really going away. The Fed's got to cut rates. There's going to be a bunch of bank failures getting ready to start. We thought it was going to be June. Apparently, yeah, we didn't even have that long as all of this plays out. Our toll-free number, 800-951-0592. The website at allamericangold.com. But, Jason, it just seems like, you know, we have all the signs of the bubble kind of coming towards an end here. You know, everyone's guessing how much time do we have? Is it 3 months? Is it 6 months? Is it a year? And none of us really know that. We don't know when, but it definitely feels like this one's going to be, like all the previous bubbles, worse than the other bubbles that preceded it. And it looks like the big problem is going to end up being in the debt markets. You got to remember, Wall Street's a debt market, right? That's a debt market. That's what it is. And then, of course, the biggest debt market of them all, the U.S. Treasury market. Is he not hearing me? Yeah, right. I don't hear you.
Hello, Jack. Am I here?
There
Hello?
you are. Yeah.
There we go. I didn't really say anything to begin with. I was just absorbing everything you just the first 3 minutes that you've been talking about. We've been talking about this stuff and talking about it, and what I was seeing when gold started spiking with say February, especially going in all through March and into April, and we saw gold essentially go from the 2,000 range to the 2,300 range. You know, it touched $2,400 and it's been sitting there. All this news, all this data, Joe, that you pour over every day is speaking very loudly that things are going to get worse. When gold goes off like it did, it's a leading indicator of inflation. And what I'm seeing is at the end of each quarter, I think we're going to start seeing spikes in gold and silver, which is going to keep up with the commodity uptick that we're seeing. And so here it comes. We're not even in June yet, so it's kind of crazy. But it sure seems like if gold and silver goes up on Monday, like this is what it did in March. You have strong movement, a huge up on Friday. You have an up on Monday, then it's up $100 the next Friday. So we could see a $2,500 gold Friday. And Joe was saying, well, because we know that if we break $30 an ounce, that there's really no resistance till $35 to $37. I don't know about that, but it could very likely happen that $35 silver is happening next Friday. I'm not going to say that because that's a big, big move for silver. But, Joe, you've seen this stuff happen around the housing crash. There were some big movements.
Yeah, and you know, just because so many things are automated, right? These are things that tend to happen because it's all pre-programmed to happen. Algorithms kick off, and for silver, just kind of works out this way where there's not a lot to hold it back in the chart to $35, and I think it's going to do it pretty quickly. I mean, look at today, right? Why is silver up so big? Well, because the charts are like, okay, looks like, yeah, barring something crazy, and it could happen, right? It could, but barring something crazy, silver's going to close not only above 30, well above $30, and the same thing. Gold looks like gold's going to close well above $2,400, and that just again, from a chart perspectives, that's things you look at. And for gold, obviously at all-time highs, there's nothing there. So you kind of just naturally set like $100 increments. Okay, well, we'll go to 2,500, right? And if it closes above 2,500, go to 2,600. And I think that's how it'll be for gold. Obviously, for silver, there's stuff there. Right? There is things there. If some of you remember, silver hit $50. And, of course, then Wall Street, they kind of rigged it to get it to come back down. In 3 days, silver lost $15 to that $35 because they essentially jacked up all the margins, forced all the paper guys to sell. This is why this market's so much different now. The paper guys have much less control this time around because the physical markets are so much bigger globally this time around. We're not the only people waking up, right? There's people all over the world are waking up to, holy crap, this fiat debt system is getting ready for unfortunately, a major collapse and a major change. So the whole place is opening up, but that's where that $35 comes from. And I will tell you this, we are going to see it, and I think we'll see it soon. To Jason's point, will it be Friday? I don't know, but don't be surprised if it is. But we're going to see $35 silver. I'm pretty certain of it this year, and I would be surprised, quite honestly, if we didn't get closer to $40. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. The Dow up 30 right now, still below. As a matter of fact, I think the Dow finished down yesterday, but just below 39,900, below 40,000. The S&P's up 2, the Nasdaq's up 8 points. The 10-year note back to 4.4 already. So we got touch 4.3 because they wanted it to, already back to 4.4. I wouldn't be surprised to see the 10-year note gain a lot more ground again next week. We'll see. We'll see how it goes. Again, the amount of debt to be sold, it's just off the charts about everywhere you look. Gold, as we talked about, up pretty big here, $2,415. Silver off the high, but not by much, right? $30.62 on silver. And I'm just, we've been telling you this. The big move isn't here yet. Hasn't happened yet. Get diversified and stay diversified and get more diversified. Right? Don't wait and say, oh, gosh, I wish and I should have. Do it. Right? The bubble, you see it. The signs are everywhere. People don't really understand it because they don't want us to understand it. You have to understand, right? All the stock channels. You know how many stock channels I got on my TV? It's ridiculous. Right? They're all cheerleading, the same thing. Get diversified. I'm just telling you. Check out, if you've got $50,000 or more, check out Why Refi. Why? Well, first, you get great fixed rates of return. And what does fixed rate of return mean? It means it's the same every month. You know exactly what it's going to be. And guess what? It's not correlated to Wall Street. It's a bubble. You know it. I know it. They don't want price discovery. There's only one reason they don't want price discovery. Right? You know that, right? All the tools the Fed says they have, they're not tools. It's just left pocket, right pocket with debt and all the while taxing us to death through inflation. That's the plan. And wait till the digital money gets here. They're going to attack the money, where the wealth is. Check out Why Refi. Invest, whyrefi.com. That's the word invest, the letter Y, REFY.com. Just call them, 888-WHY-REFI-24. Some of that Wall Street money, get it in a safe place, right? Obviously, get your gold and silver put away. China setting a record amount of debt sales. And remember what Goldman said earlier this week. Hey, guys, we're looking at the math. There's a lot more gold being bought than that we're being told. And here's the problem. See, the major jewelry manufacturers, that's all reported. U.S. mint purchases, all reported. Any refineries that are buying gold and taking delivery of gold, all that's reported. Hedge funds, ETFs, whatever. All of it is reported. There's only one class that doesn't get reported if they don't want to, which is what? Central banks. Isn't that weird? Huh? Why do they get to be private? Everybody else has to do because they don't want you to know, hey, guess what? We don't have any faith in this fiat money either. Because that's really, when they're buying gold, that's what they're saying. We don't have any faith in it either. China sold a record amount of U.S. Treasury debt, according to the Treasury Agency, as the Asian nation continues to diversify away from the dollar. They offloaded $53.3 billion worth of treasuries in a single quarter. So, Jason, China is really ramping up the pace. And again, we know about BRICS. We know what China – listen, China wants a big seat at the table, Jason, and they're showing it.
And they want to buy everything out of that COMEX and push the COMEX price to have to go up. It's you can see it happening in real time. That big jump in gold this year seems to have a lot to do with pushing the COMEX. I saw some numbers on COMEX silver. It could be taken out in less than 1 year. I mean, just what would silver do then, right? And if you do have a commodities-backed BRICS currency, then it's going to be whatever they want it to be. And if you I'm not big in investing in gold and silver, but if this situation plays in the direction that it's playing, if China really wants to control the currency situation in this world, and they want to push it through having a commodities-based backed BRICS currency, then you're going to see a big spike in gold and silver and something we've never seen before. I think maybe it settles down at some point and once a new system is in place, but Joe, you could see those wild numbers that you see the podcasters and the radio guys, those ridiculous numbers that you see actually can happen in that sort of situation. So we'll be watching it, right, Joe? We're going to keep a watch.
We've got an article on All American Gold right now, $27,000 gold. I mean, we're not even at 2,700, and we're talking about 27,000. And again, remember, Janet Yellen was over there. Then Blinken was over there. They weren't talking about solar panels. We look at copper. Another one, a COMEX squeeze there. And I think this is exactly what we're seeing, Jason. And it's not just China. They're the main culprit, but it's not just them. And this is really the situation that we're setting up into is lack of supply, overwhelming demand, and at the same time, an overwhelming supply of debt coming to the markets. I mean, we're going to add $2 trillion more between now and the end of the year. I mean, that's crazy to think about. And Jason, with the overwhelming supply, that's the biggest problem because everybody's like, realize, hey, that's way too much. That's way too much. Nobody wants to listen, right? And this is what happens when the bubble bursts.
Yeah, and if you look at just simply dollars, number of dollars versus ounces of gold, gold would be $12,000 per ounce. So I don't know about 27,000, Joe. I think I understand there's metrics for that. But if you just go simply ounces of gold to dollars, it's $12,606 per ounce. Silver, Silver is $1,560 to the ounce. There's what all those silver guys saying it's got room to catch up. Can you imagine $30 silver just going to $800 silver, Joe? And here's the thing: we do have a blueprint for it. Now that silver's kind of sitting where gold was in the 70s, we did see gold go from 35 to 800 inside the 1970s, didn't we?
Yeah, and that's something, think about that move. That was a 10-year move. In 10 years, that's what it did. But, yeah, there's going to be a very big move at the end of this, right? Are we going to see, silver as an example, adding $20 or $30 in a single week, gold adding $400 or $500 in a single week? I think so. And that may be light, right? That may be on the light side of it. But again, it's about supply and demand. It's really not about anything else, right? This isn't complicated, right? It's not hard to understand. All these people that think oh my gosh, it's so complicated. You just don't know, and you got to be more educated. That's all nonsense. That's all nonsense. And everybody out there listening, you know that, right? You understand it. Think about what it costs now to be comfortable, right? Depending on where you live, being comfortable, you may have to make over $300,000 a year in some of these blue states to be quote unquote comfortable. Mississippi, but come on, that's got to be like the least expensive place to be. Jason, it's almost $180,000. Right? What happened to the middle class? All these people, I make $100,000 a year. I'm middle class. No, you're not. No, you're not. Well, you're low middle class at best.
It doesn't matter what part of the country you're in, or what part of the country you're in. Copper, lumber, these things that build houses are going to cost a certain amount. It may be cheaper to get it down to Mississippi, I suppose. But, Joe, it's going to cost a certain amount to build a house no matter what. What did you say, $180,000? That's probably for existing homes that people don't want, right? That's for people that just want to keep living in. Hey, I know if you grew up in Mississippi and that's your home, you got to stay there. But there are some dilapidated properties in some of those Mississippi cities. I can see where you can get a house for $150,000. But if they're building a new one over there, Joe, I'm sure they're building some new homes in Mississippi. There's no way it's $180,000. There's no way. Those are probably $300,000 homes.
God, so a new home in Mississippi is going to be well over $300,000. Period.
Right.
That's just what it's going to be. Easy, probably $4. I don't know. But again, there's other things too that are coming. All of you with Medicare, boy, wait till next year. The insurance companies are letting it be known that there's going to be major increase in cost to the government for Medicaid next year. They lost a fortune this year and said, hey, get ready for prices to get a lot more expensive. And Jason, this is inflation for next year. And again, think about hospitals, same thing, right? All of these costs are they're getting ridiculous. You can't even afford to get insurance on your house. You can't afford to get insurance on your car. You can't afford to get medical insurance. And the whole thing is a disaster. And why? Because they decided that they didn't want to follow the rule of economics. What did they want to do? We want to just keep printing money. Think about it. Starting, 2 weeks? The Fed's going to stop selling $35 billion of treasuries a month? Like that's going to fix it? It's not going to fix anything. Here's the thing. Before the end of the year, they're not going to be selling any treasury. Matter of fact, Jason, I wouldn't be shocked if they're going to have to start talking about buying treasuries again. That's how big the problem's going to be.
Oh, boy. What about that, huh? And quantitative easing in the middle of what's getting ready to happen. If that happens, Joe, That maybe that's what gold is starting to react to. Maybe somebody's already knows. The reason it's a leading indicator is because those with big pockets and those that make the big decisions monetarily, they have the information. They're not watching the information and looking at it 3 months ago and 2 months ago, the lagging information. There are those that know this stuff up to the minute. And if they know that quantitative easing was going to happen, let's just say ahead of time, Joe, what's going to happen to that inflation? Why is gold taking off? I think there's a plan to print money and leave rates high. Maybe they do that quarter point lowering before the election just to get markets kind of excited. But Joe, it just seems like there's a lot of crazy stuff that's going to happen right before that election and right after that election that's going to lead us to where we're headed for the next couple of years, starting in 2025.
Yeah, the warnings just come all. Remember Jamie Dimon. He warned just in the last 24 hours. Jamie Dimon, the head of Goldman, Ray Dalio, Jeff Gundlach. I mean, we haven't heard from Bank of America CEO, but I'm sure he's saying the same thing. Here's Dimon, right? The sooner we focus on it, the better. Talking about the debt. It's going to cause a problem, and the market's going to be forced to deal with the problem, and it's going to be far more uncomfortable the longer we go without dealing with it. That tells you what you need. Get your gold put away. 800-951-0592. Joe and Jason here wrapping up the week. Gold and silver now definitely hitting very key technical, areas, if you will. Silver, $30.70 right now, $30.70 above the technically important $30 level. Now be ready for $35 silver and probably it's going to be a lot higher than that, but soon, very soon, in my opinion. Gold right now, $27.15 or $24.15. I'm sorry, $24.15 on gold right now. Ray Dalio. So we hear all these warnings. He says that he's anxious about the waning investor appetite for those government bonds known as treasuries. I'm concerned this softening demand and the ability to meet the supply, particularly from international buyers, right? So this market, it's drying up. Without the foreign buying, we got a big problem. We already got a big. Here's the problem with this, because I see look at what I said about how fast China's trying to get rid of dollars. I mean, it's amazing. I mean, if they do what they did in the first quarter, right, they're going to have dumped over $200 billion worth of treasuries this year alone. I mean, they're trying to dump them as fast as possible. And of course, here's the thing. How do you make money buying government bonds? Well, you make money when yields go down, right? That's how you make money. Kind of the inverse thing. It's kind of, it's weird how it works. If China thought that the treasury market was going to go back to 0 or 1% or 2%, they probably wouldn't dump them. Hey, yeah, I'll love it. I'll buy it at a 5% yield, and then when the yields go down to 0, I'll make double. I'll clean up. No, they're dumping them. And Dalio says it's not just them. He says the U.S. debt picture is becoming more and more dangerous in the Financial Times, and investors getting very wary about the demand and making higher yields and higher returns to own treasuries. In other words, hey, with this combination, it's pretty simple. Too much supply, not enough demand. The yields go up no matter what the Fed decides they want to do. They can say we're going to cut all they want. If there's no buyers, Jason, it's a problem.
Yeah, that's kind of the whole thing when it comes to bonds, right? If there's no buyers, there's a problem. you can't run a debt money system if you can't sell the debt, right? All this stuff would be a lot easier for Americans to have to deal with if we just had a treasury that just printed the money and we just kind of just move that central bank right out of the way. We don't need that. We don't need that. Joe and Jason doesn't need to be selling you gold with spot price moving towards $2,500. We don't need to do that. But because the system is what it is, because we don't make the rules, we have to play by the rules that are set. This is where we're at. And you're right, Joe, in a debt money system, what happens when they can't sell this stuff? The world is definitely changing. The pieces on the chessboard are being moved around. And you, the listener, you need to, if you financially want to be in a better position, you got to be listening and you got to make some moves, Joe.
Yeah, and unfortunately now we're in this cycle here, right? I don't know how we get this under control. I wish I did. I mean, the amount of money it costs for everything. I didn't even CVS. Huge problem with Medicaid. Huge problem. All the health, the big health companies, Banner and all these, they're all getting crushed here and said, hey, come next year, there's going to be a massive increases in what they're going to charge, the hospitals and whatnot, as far as what they're going to get paid on whatever the ailments are going to be. I expect a major increase in the cost of these programs. And we know the government, well, guys, we can't pass it all along, right? We're just going to add it to the debt, right? It's just going to be, it's off the charts. I'm just telling you. And there's not enough stuff to cut. There's not. What are you going to do? You really going to tell people that we're going to cut your Social Security check? Right? We're gonna throw millions of people off of Medicaid and Medicare and all that, right? They don't want to do any of that stuff. And again, you'll see. This year's a good year for debt. This is a good year. 2025 is an absolute train wreck, and the amount of debt that we are going to go into as a nation. And the problem is it gets worse after that. 2026 is worse. 2027 is worse. Why do you think they're all out there screaming about it right now? Because you know what? You know who knows? These guys know. Jamie Dimon knows. Ray Dalio knows. Goldman Sachs knows. They see it every day at these auctions, and they're talking to the people that are doing the buying, and they're like, yeah, guys, hey, my boss is telling me, I don't know, what are you guys going to do? What's the plan? I think you're going to see a huge wipeout of banks. I really do. It's going to be, this year's going to be a trickle. I think we're probably going to lose, 40, 50 banks this year, probably, and that'll be a trickle to how many are going away. I think, we're going to lose thousands. I think that's what it's going to be. Thousands. And they're going to try to tell, well, they're irrelevant now in the digital currency. We don't really need those banks. And, of course, really what they're saying is, yeah, we're the system's rotten from within. And that's going to be the big problem, Jason, which is, okay, you built the house of cards on the pile of debt. Now all of a sudden, nobody wants any more of it. Well, what's going to happen? Right? The whole thing comes crashing down. That's how debt money works. That's not a shock. Listen, that's not even a revelation. If you wanted to do just a little bit of homework, it's not even that hard. Every fiat currency has gone to zero. There are no exceptions. There's never been an exception. And fiat money's been around since like the 1200s. I mean, yeah, we got a long track record. And by the way, you know what's been money for longer? Yeah, only one thing, gold. It's always been money, always will be. We'll be back. We got two great specials for you coming up next. 800-951-0592. Got $20 gold Liberties, 1866 to 1907. And I know some of you new listeners out there, Joe, why do you always sell the old stuff? Costco sells gold bars, right? Here's the thing. It's really, really easy. Again, not complicated. It's the most private way to own gold. The tax laws are the best. Why? Because you can buy it, sell it, and trade it in any quantity. And I'm not going to ask your Social Security number. My accountant doesn't have to send you a 1099. Don't have to do any of those things. Gold bars. Look at where gold is. We're talking about maybe $2,500 tomorrow, or next week. Sorry, by next Friday. It's, 4 gold bars. That's $10,000, right? $10,000. Well, guess what? As soon as you get to that number, Hey, Mr. Schmuckatelli, I need some information from you. Got to send you a 1099 because that's what the law is. There's one exception. Pre-1933 U.S. gold. Hey, okay, well, I'm going to sell that. Now you're on your honor, right? It's up to you. What did you buy it for? I don't know. What did you sell it for? I don't know, right? Hey, that's on you. That's why we sell it. That's why I love it. If they change the laws to something different, then we'll do something different. But that's what the law is. Gold's $2,400 plus. There's going to be a big sale today. $20 gold, $25.95. $25.95. If you buy 20 or more, $25.85. 50 or more, $25.75. So take advantage there. If you're looking to make a move into the gold market, that's the best deal on the board today by far. If you're brand new, all you do is call the girls and say, I want the special, and tell them how many you want. It's that simple. We give you a trade number every time you order. You get a trade number. That locks us both in. If you bought yesterday, gold goes up $30 today. Guess what? You're locked in. You don't pay anymore. You're locked in. No matter what gold does after that point, the second you hang up the phone, that thing is locked. We show up here Monday and gold's up $100. I don't call you up and say, hey, add another 100 to that. No, you're locked in. You can pay for it. Personal check. If you're in Arizona or Colorado, you want to go to our office, pay cash, you can do that. The bank wires, we take all credit cards, all of them. We only charge 2%. It's 2% charge if you want to put it on the card. $20 gold pieces, $2,595, 20 or more. Save another $10, $2,585, 50 or more. Save another $10, $2,575. And then for silver, giving you a good opportunity here. I'm going to pretend silver didn't go up $1 plus this morning. $30.70 right now on silver. Right. Rolls of silver dimes, $120. Listen to yesterday's show. I had rolls of silver dimes at $120. $120 still today. Rolls of silver quarters. They were $240 yesterday. I'm going to keep them there at $240. On Monday, the quarters are going to be assuming silver doesn't go even higher, they're going to be $250. The dimes are going to be $125. You're saving money all the way around, gold and silver wise. Jason, this is the place to be. The fundamentals, the physical fundamentals are incredible. And that's the big thing. This isn't ETF. This isn't paper fundamentals. This is physical fundamentals.
Yeah, and I've been doing gold shows with you, Joe, on KHNC for 6 years now, and I always talked about how gold and silver will go up because we have inflation, we have a central bank. We haven't done a whole lot of price predicting. Joey, sometimes you do it. I don't do very much price predicting very often. But when I saw things getting ready to happen early in late in February, and certain indicators were happening with the prices, it became easier to say, hey, you can go back and listen to all my shows. I don't really say, well, gold will be here at a certain point, or it'll be there at a certain point. This year has been a little bit easier to recognize all the factors. And when it went, how many times did we talk about, Joe? Okay, if it's going up Friday, if it goes up Monday, it's going up $100. We did that 2 or 3 weeks in a row when gold went from $2,004 on Valentine's Day to suddenly in early April it was touching $2,400. Now it looks like things can change before the end of the bell here in a few hours, but it looks like gold's closing about $2,400 for the first time. Silver looks like it's going to be closing for over $30. And if this thing moves on Monday, you've got $2,500 gold. And Joe and I, we were talking about premiums. Maybe the premiums don't go up. Maybe they do. It just depends on how much buying starts to happen. But, man, if the spot price just keeps moving, it's not going to matter if the premiums are going up and down. It's just going to cost you $30,000 for an ounce of gold here before you know it.
Yeah. Wow. Apparently now Ukraine who is this? I want to make sure. Okay, it's the New York Times. Is reporting that Ukraine is asking NATO to send troops for the first time, officially asking NATO. Apparently, according to the New York Times, the Pentagon is considering sending U.S. troops to Ukraine. I don't have any more than that. I don't know if that's on an advisory role. I hope they're not. Are we going to send troops to fight in Ukraine? Gosh, I hope not. Man, if that is true, I'm not saying that it is, but this is what the Times is saying, that they are requesting troops from NATO. Man, next week they can be a barn burners, right? The year of chaos. 800-951-0592. 800-951-0592. Joe and Jason wrapping up this week. Gold and silver above some key, I guess, technical levels. Squarely above 2,400 on gold. Silver, man, just off to the races here. $30.70, so squarely above that $30 level. Again, if you're new, just tell the girls you want the special. Tell them which ones you want, the quantities you want. I mean, it's just that simple. There's nothing complicated about it. I know it's so complicated, and and then we also obviously buy it as well, right? If you want to sell it, right, we're here for you to do that as well. We got 3 types of customers. One is what I'll call the prepper, right? Hey, and they like utility silver, dimes, quarters, half dollars, right? Because, hey, I may have to use it to barter with, right? The power goes out, whatever, the digital currency, whatever the reason may be, right? And that's, probably, 5-10% of our customers, that's their focus. Then we've got, 10% of our customers that, hey, I just want gold. I'm looking to hedge against the dollar, and I want to buy it at the best price. Right? That's what they care about. I want to be private. I care about privacy, and I want to pay the best price. Well, that's the $20 gold piece today, right? 1 through 19, 25, 95, 20 or more, 25, 85, 50 or more, $2,575. Right? That's that. That takes care of that. The other 80% of our customers are a little bit of both. Right? Hey, I want the best price. I want to be private, and I want good pricing. But you know what? Those prepper guys, they're not that crazy after all. And so today, Jason, we got the best of all of it, right? We've got rolls of dimes at $120. We got rolls of silver quarters at $240. And then, of course, the gold, the $20 gold. I mean, this is something where if you're a newbie, you can kill two birds with one stone with the specials that we have today, Jason.
And load it up. I'm telling you, when we've had record high gold prices in the time that I've been doing the shows, we had massive sales going on. And Joe, it's just I kind of understand where things are going, but the fact that we don't have phones blowing up every single day in 2024, it shows you a couple things. It shows you one that people are having trouble putting it away. Yeah. But number two, I think it shows a little bit of ignorance. Deer in the headlights, people waiting. Well, I'm going to wait. Man, that is not the right recipe right now.
It's election, right? I'm going to see the election, and of course the Trump trial. A little bit of distraction. I got to Cracker Barrel. Here we go. Another one. Cracker Barrel down almost 20% this morning. Slashed their dividend by 80%, saying that the stock's at a new 52-week low. Cracker Barrel looks like, Jason, another chain here that looks like they're going to have to start closing stores. It really is crazy how fast all of a sudden that I'll call this maybe the casual dining space is really starting to show troubles here. I mean, Red Lobster, Cracker Barrel. Look at what McDonald's can't even come up with something for $5, right? Without losing money, And hey, by the way, we only can do it for a little bit. Get it put away. 800-951-0592. Diversify. Jason and I, we're coming back with the half-empty cup. Then we'll see everybody on Monday, see where the golden